So let us review. Spoke about currency, 8 most tradable currencies, US dollar. We talked about the euro and how many different countries that it represents. Types of currency, our three main types of currencies. We have coins, we have paper money, and we have banknote. We also have cryptocurrency. We don't focus on that one quite as much when we talk about our three main types. Yesterday we talked about functions of money: medium of exchange, store of value, and unit of account and or measure. If you need help remembering any of those, please watch yesterday's video. Today we're going to talk about forms of financial exchange. So we talk about financial exchange, as we can see there, the act of transferring one's money from one entity to another, basically from you to me or me to you, from the producer to the consumer. We'll talk about producers and consumers in our marketing. With our forms of financial exchange, we're going to focus on four. First one being cash. We look at cash as being ready money, something we have right now, such as money in hand. There you go. I have it right now. Petty cash. Businesses have petty cash. We'll talk about that in more of a business standpoint. Bank account balance, money I can go get right now. And money market accounts. Again, cash, money I can get right now. The next form of financial exchange that we have is credit. Credit enables a business or individual to purchase goods and services in exchange for a promise to pay later. Now, an individual has credit and businesses have credit. Our governments have credit with each other, believe it or not. It is most helpful when consumers want to make major purchases, though it is often used for more common, less expensive items. We use credit when we're making major purchases. Don't recommend buying a car on a credit card. We'll talk about that much later. Big items, $400, $500, that can go on your credit. We're going to talk about how we're going to balance out our credit so that we don't get upside down later on. Customers are typically issued a credit card from a bank to make such purchases. As a high school age and coming into college, you're going to get a lot of people talking to you about credit cards. I will tell you, be very careful. We will talk about credit cards at a later date. The other two forms of financial exchange that we'll talk about, we have debit, a variation of credit. Consumers using a debit card to authorize a seller to withdraw funds directly from the consumer's bank account at the time of sale. So credit is interesting. With credit, you might be making all your charges, and then you'll pay for that month. Okay, every credit card is a little bit different about how their term is, so you want to make sure you understand the term. Again, we'll talk about these later. But with credit, you're going to build all these things up, and then there's going to come a day due. Okay, I need my money now on this date. With debit, it's more of a situation where they're checking for your money right this second. Variation of credit, and again, consumers, you get a debit card, and I'm going to authorize the seller to withdraw the funds directly, as in most typically it's right now or within a very short period of time. So debit, you cannot get in trouble because you can't spend money you don't have. And the last one we have, electronic funds transfer, which is online transfer of funds from one account directly to another. Nowadays, we're using EFT more and more and more. You might get paid using EFT. Your direct deposit is EFT. You might pay your credit card. So my monthly credit card gives me a statement, got to pay it monthly. I pay that with EFT. You might pay that with EFT. You might pay your electric with EFT. You're sending the money electronically to them.